What's up, good people? How you doing? Good morning. It is time for CPI Consumer Price Index. All right. Let me make sure everything is okay. Good morning, good people. Hey, let's do our check-in this morning. Let me make sure everything is operating on point. On point. Check. There we go. There we go. Let me check one more thing. We have CNBC live ready. And good morning. Good morning. Let me see what's going on here. Make sure all my levels are good. Yes, sir. Yes, sir. Sound. Yes. And yes. All right. All right. There's the fam. Hey. This is shirt 3 of Paisley Week. We bringing the 60s and 70s back. Hey. Good morning. Good morning. Good morning. Good morning. It's amazing how people wake up mad. Oh my goodness. All right, good people. Hey, we do what we do. All right. We got a few minutes and we are going into it live. All right. They say, hey, Chicago Bear down. Good morning. Good morning. Yep. All right. They got it all squared up. Hey, before we get started, let's see here. We're at 28. Good morning from Boston. Hey, guys, make sure you check out the second link below. Download it. Get your 20 free stock. That is Moo. Get your 20 free stock. Deposit $100 minimum. Okay. And then make sure you check out Stock Up You. Come join the family. And as we learn and earn. Okay. We learn and earn. All right. Let me blow this up, as they will be coming on in seconds, right? Hey, good morning, Austin, Texas, in the house, right? Let's just go right into and listen to what they're saying.
And higher than the previous. So unlike headline year over year, it hasn't gone down every month. We want to watch 5.5 on the year over year.
Betsy, anything special we should be looking for within this?
So I think that the complication right now is year over year, it's been coming down. But what we've seen is inflation kind of moving sideways over the last few months. And the reality is that's what I'm expecting to happen again this month. We know used car prices are going to come in hot again. We know that shelter inflation is going to continue to contribute to high inflation. So I think the big news is going to be whether we see inflation hotter in places where we're not expecting it.
Hey, Tyler, how about you? You holding out hope that this is going to be a cooler number?
So they're trying to see if it's going to be a cooler number. I hope it's a cooler number. And the market will continue this bounce, right? Whether you think it's a bear market bounce or a sustainable bounce, we shall see what is going on in a matter of seconds now, right? Let's go right back.
I would like to see that slip, hopefully, to sort of 4 to 4.5. But I think it's more likely that we moved in the 4.5 to 5% range.
Hey, Mike, 20 seconds on equities, what they're prepared for, what they're not.
Well, we're definitely bracing, I do think, for this kind of stutter step in the disinflation process that we've been talking about. I think what's unclear is we don't know what the Fed's burden of proof is for pausing, for going more. We're going to have another CPI number and another jobs number before the next Fed meeting. So I don't necessarily know that this is going to be seen as make or break, but we're braced for something a little less friendly. So if we get really a lower number, probably going to be bullish.
Ahead of that number, S&P indicated off by about 4 points. Dow futures off by 4. The NASDAQ up, but just fractionally, maybe about 2 points there. Right now, it is time for that CPI number. Rick Santelli has it. Rick?
Yes, our April read on the Consumer Price Index. Headline number expected to be up 0.4. is up 0.4. High water mark there was up 1.2. That was back in June of 22. If we look at ex-food and energy, or core, it is also expected to be up 0.4, and it is up 0.4. High water mark there, well, that was up 0.8 in April of 21. And if we look at the year-over-year numbers, 4.9 on year-over-year headline. It has gone down every month since 9.1 extreme in June of 22, which was the extreme since 1981. And if we look at core year-over-year, 5.5, exactly as expected. And the high water mark there, 6.6. That was in September of last year, the high of 1982, to go back that far. And that is where the stickiness is. There isn't sticky in year-over-year headline. The stickiness is in the core. If you just look at the last 3 or 4 months, we have 5.5 this month, 5.6 last month, 5.5 before that, 5.6 in Jan, 5.7 in D's. Then in November, you're at 6%. That's where the drop-off started. So there's the congestion. But the markets are weighing in very quickly here, panel. Rates are moving down. 2-year rates are moving down. They're at 395. They were at 405. They're down 10 basis points. We're down about 5 basis points in a 10-year, and we've rallied nicely in the pre-opening Dow futures, now up 100 points. So the market is speaking, and it certainly doesn't seem to be bugged at all by the year-over-year core. Panel,
you
back
got that
to
right,
you.
Rick. Let's bring in some of the rest of our panel for some instant reaction to that number. Tyler, what do you think? That was not hotter than expected. In fact, in some cases, a little weaker, even the year-over-year, if you're looking at the headline.
I think the year-over-year was weaker, and I suspect a lot of people like myself have been looking at the Cleveland Fed nowcasts, which were suggesting a hotter-than-expected number, so there's probably a bit of relief that it came in with consensus. You know, in terms of causes for worry, a lot of this still looks like it's driven by energy disinflation. The shelter was still up 0.4 month over month. A lot of those core services seemed like they were still up. It was new cars. It was energy that were really dragging things down. But yes, relief that it didn't come in hotter than expected.
Betsy, how about you? I mean, this is, got to hang your hat on something. And if this is something that we've been hoping for, you know, it's
I
worse
think
than expected.
When the data delivers at expectations, you know, it's a pretty good day. Everybody sort of knew what to expect, and that's what happened. I mean, look, used cars, exactly as we expected. That came in at 4.4% for the month. Like, we knew that was going to be hot, and I think it was even hotter than some people expected. On the plus side, what we saw is shelter inflation coming down a tiny bit. And that's one where we're really able to do a pretty good job of forecasting going forward. And I think that we're going to see that shelter inflation continue to come down over the next few months. So I do think that.
So there we have it, good people. There we have it. CPI was actually pretty decent. Let's see if we can go over some. I was taking pictures with my phone so we could just go right into it. Forgive. So as we see, we got consumer price index month over month, 0.4, and versus 0.4 estimate. That was right on. Okay. And then we had CPI year over year core, which is a 5.5, was right on what was expected. 5.5. That's core CPI year over year. And same thing, year over year core. And CPI X food and energy month over month was 0.4, and everything was expected. So we are hitting on all cylinders. We're clicking on all cylinders with CPI. As you can see, the futures popped up, and of course there's the treasury notes right here, the bond yields. And as you can see, the 2-year is still higher than the 10-year. That's called an inverted yield curve. Okay. So long term, we are still in trouble long term. Short term, we're doing good people. Here we go. CPI food and energy month over month. Year over year, actually fell down a little bit, 4.9 versus 5.0. Let's listen in a little bit more.
It feels like we're on the way to being able to get beyond the inflation fixation. In fact, the market reaction over the last few months to the CPI number and PCE numbers has been slightly more muted. It does not seem like that big spring-loaded number that we got used to in 2022.
Hey, Rick, we didn't get a chance to see what's happening on the short end, what's happening with T-bills right now. You watching that?
Oh, absolutely, I'm watching it. We're in the 530s on the 1-month bill. All bills, though, are pretty much in an elevated pace. Once again, Mike said it's an interesting situation to finally have the Fed fund future range above inflation. And right. I would say Fed fund future range is what T-bills are paying most attention to. And I think the evidence of that could be that if this was more of a debt ceiling issue, and believe me, I'm sure debt ceiling figures into T-bills to some extent, but I don't think you...
That debt ceiling is a problem. Let's take a look at crypto. These are some of the popular ones. Okay, we got Bitcoin up 1%, Ethereum 1.4, Solana up 1.3-ish, and we got Matic up. Everything is up pretty good. So it's been a good morning, but remember this data is lagging, all right? So we're still good, right? So we're going to take it. We're going to continue to take the good news. We are trading the market that we are in. Hey, welcome everybody. Yeah, exactly as expected. Everything was dead on as expected. South Carolina. Hey, Jessica. Jessica from State Farm. All right. Anyone trust? The data's the data. They don't come up with the data. You know, sometimes I go to Fox, and sometimes Fox stay too political sometimes. And then Bloomberg, and then Yahoo. I bounce all over. But, you know, you pick what you want to pick. The data's the data. All right. And then you go into grocery stores and you see, yep. That is true. I believe that. You go into the grocery stores and they tell a whole different story. All right. I think there's some political influencers here. Things are super expensive, so I am confused as to how it's coming down. Remember, this information that we're getting about consumer price index is measuring something that's behind, right? And I believe tomorrow we'll probably get PPI. It usually happens the next day, which is producers price index. So we got to measure goods and services from the producers and the consumers. We are the consumers, right? But you guys know things get produced before they get consumed, right? And so it's behind. So what's the CPI? I'll show it to you. We did screenshots. I'm not as quick as some of these guys. Some of these guys, you know, you got to write this stuff down and blah, 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 blah. As soon as I get this to act right. And there we go. And so let's take a look, good people. Let's take a look one more time. There we go. CPI year over year is 4.9, so it actually came down from 5.1, right? Then we have core CPI X food and energy, okay? Take food and energy out. That is right where it was expected to be, right? And then we have consumer PR at 4. Everything was expected, right where it was expected. And then we have core CPI, which is what the feds really use. And year over year, it's 5.5 versus 5.5, right? And what else? Oh, yeah. Here we got consumer price index month over month was where it was expected, 0.4. All right. All right. So as you can see, big tech is doing well. It's alive and well this morning. But that's it, good people. I just wanted to come on and leave you guys this information. Thanks, Chucky. All right. Consumer Price Index. Oh, yep. So bullish. I wouldn't call it bullish. I would just call it as expected. Everything was as expected. Hey, no problem. We want to show you very bearish. No, it's not bearish. It's not really bearish and it's not really bullish. It was as expected. Everything was as expected. As you can see, the Dow is, I would call that pretty muted. It was a little nervous before, but remember, the market adjusted yesterday, right? The market adjusted yesterday. Stuff gets priced in. Yep. That is true. When you go to the grocery store, the prices are not reflected, right? And let me tell you guys this. One of the reasons why prices are not reflected is when their cost goes up, meaning grocery stores and car dealers and all of that. If their prices go up, if their costs go up by 15%, they're not just raising by 15%. They're raising by 22%, right? And they're making more money off of it. It's just like oil. When you go to the gas station, when they go up per barrel, it's not reflected in the price that you and I pay because they're going to go up way more. And then they report record-breaking profits. Now, their profits are going to go up because costs are going up, right? And they pass it on to us. But they don't just go up what their costs go up, right? That's why PPI, Producers Price Index, is very important. They actually add on. And some companies in some industries really make a killing when inflation goes up. They actually make more. Their margins increase, okay? So I just wanted to say that. Anything else? All right. Okay. All right. Somebody said keep DCAing. Hey, we got Ireland in the house. Ireland in the house. I got to get to Ireland. Yep. No, I'm sorry. I've been to Ireland. Hey, yep. That's my boy, Charlie Harper. Merry Christmas. Happy birthday, Charlie. Yeah, I have some XRP. Not bullish. Dollar going up. It's not bullish. Okay, trapping. Hey, good people. I just wanted to come on and let you know what was going on with Consumer Price Index. We'll probably have PPI. Let me check. Producers Price Index. Tomorrow I'll be on live with it. Make sure you fund your Moo accounts. If they do call you, don't get freaked out. They actually call sometimes to make sure that you are you and people are enjoying Stock Up, learning more so they can earn more. And you guys know these are the teachers, including myself, Stock Mo, Keenan Grace, Mommy Trader, and Stock Curry. All right, good people. Hey, listen, I want you guys to see the video from yesterday. I did another, we returned to Technical Tuesdays with Stocks with Josh. It was a really good session. I'm going to leave a link here in the box. I want you guys to check that out. Make sure it was the video that I posted on yesterday. All right. So we're going to stay positive, good people. If you see negative people in the comments, shut them out. We stay positive here. Haters gonna hate. All right. So we will see you later on today. It is a blessed and wonderful morning. Make it a better day. Be kind. Rewind. Do it again. We'll see you later on today.